Hey everyone, this is Mark from Stocks and Cash. It's Wednesday, April 4th, 2018. Here with your market update video, talk about some holdings and then some potential trade setups for tomorrow. Let's jump right in and take a look at the SPY because we had a nice big bullish candle today. We've really been in this zone between 265 or so and 257 and a half. You can see that let's zoom in slightly, we closed at this level around 260 yesterday. This morning we opened up very low around the lows of the day on Tuesday, and we basically just melted up throughout the day. Not much pullback at all, very small wick, very strong bullish candle. And if we take a look at volume was about on par with yesterday. Not the strongest volume in the world, but certainly above the average for the most part, as you can tell here. Stokes are starting to break out bullishly. MACD is starting to turn up, and RSI is looking bullish as well. This looks like it could be indication of a bottom. We had a level here of 257.55. This is the lowest close we had. And then we kind of touched it here on the 23rd. We kind of closed on it on the 2nd. We did punch below it a bit on the 2nd and the 3rd, and even opened up below it on the 4th. But you can see that we did finally close above the 8 EMA. That's the first time we've done that since back here on March 16th. So it has been quite a while. As I mentioned yesterday, there is still some overhead resistance we need to deal with, such as this pivot point here on the 2nd of March. That's at about 264.5 or so. Plus we have our exponential and simple moving averages that we need to take into account. And we also did break out of this descending trend line as well. Now, all these things are certainly positive, but I'd really like to see a close, above this 265 level, a nice strong close, maybe get above the 21 exponential, and then I think we could be on our way. We'd be looking to try and fill this gap around 270, and as I've mentioned a few times, 280 would be the next target after that to fill that gap. And then we could think about touching all-time highs once again at 286.63. Now, that's obviously a long way off. I would not expect to get there anytime soon. I think, if anything, if we do get there, maybe May time frame. I think it would take quite a bit of time in April to kind of meander up there. And typically it's not going to go in a straight line. I mean, it did back here during this rally, but as you can see, that rally burst, and we had quite a pullback, and we have been pretty choppy ever since. So let's take a look at the VIX. You can see that the VIX volatility was low, and UVXY is the ETF that you can trade. Oops. Excuse me, sorry about that. You can see that we closed on the 8 EMA, but we also did close below this level here, so the VIX may be rolling over, the volatility may be rolling over. As the markets start to climb, I would expect to see volatility decrease. So I think tomorrow will be a very telling day in the markets. If we start, if we get a close above 265 and we start pushing up to this 270 level, to me that'll be a good indication that the markets are kind of healthy, and we're trying to, push back and get back on a bullish pattern. And then certainly this next gap, as I mentioned, at 280. So I do think there's room to run. I'm optimistically bullish at this point. I don't have any bullish trades as of yet, but there are certainly some things that we can look at to get into tomorrow, assuming that the markets continue on and we don't have another kind of dead cat bounce like we have had, since the 26th. Dead cat bounce here, pulled back, had a kind of a rally here, pulled back, inside day candle, and now a big bullish candle that could be confirmation that we are going to resume the bullish trend. But again, let's get above 264.69, maybe 265, and see if we can get on back up. Again, first target here of 270. Let's take a look at the Qs. Also a similar day, big bullish candle, but you can see that we're still in this downtrend here. So tech is still a little ways away from having a cleaner looking recovery. We are kind of at resistance levels here, the 8 EMA, this ascending trend line, um, and then of course we have overhead resistance. The good thing is that we did close above this candle here, which acted as a bit of a pivot and then back down. So we did close above the low of 323, so that's an encouraging level. I would look at wanting to get above 162 or so for some confidence in the Qs kind of rebounding. That would put us above above the 100 simple moving average, and then we'll be looking to try and fill this gap up here at 171, and then try and get to all-time highs above 175.21. And let's take a look at IWM real quick. You can see relatively similar to the Qs. We bounced but still didn't get above this descending trend line. We did close above the 8 EMA, but still haven't gotten above the 100 simple moving average. So there is some work to do on the small caps as well as the Qs. So not saying that it can't happen, not saying we can't break out and push on up, but just be cautious until we do get confirmation of that breakout, which again tomorrow, at least on IWM, I'd like to see above the moving averages, maybe get above this 153 level and have some confidence that we can come back up and test 160 or so. So American Express, quite a melt up today. Let's take a look at what the stock did. We ended up opening down here, and we really truly never looked back. We just kept making higher highs and higher lows, just kept on going. So I was stubborn, I admit, and I held on through this level. We pulled back down, and I said, oh good, we're going to kind of reverse a bit. I'll probably get some back. Maybe we'll come back and test the lows. Obviously that didn't happen. We put in this candle, then another bearish candle, and as soon as we got up here, I closed the trade. Pretty much broke off even, and is what it is. I probably could have gotten out here. Well, I definitely could have gotten out here for quite a decent gain, probably around 30%. I was looking at back to the 45% level that I was at from Monday, but obviously that didn't work out for me, and so I'm out of positions now. The one thing that I'm just noticing here is that the close was pretty bearish. We kind of had this bearish reversal pattern, having kind of a shooting star here at the top, and then a bearish candle to close with pretty high volume. Now, I'm not saying that's going to predict a doom and gloom scenario for tomorrow, but it is something to just note on the close. And let's see if the SPY did the same thing. Not quite as bad, although volume is typically the highest on the last 5 minutes, in the first 5 minutes, which you can kind of see here. This is the first minute candle, the first 5 minute candle. Volume not quite as high as at the end of the day, but typically, that's usually where your highest volume is, at the beginning and the close. So, bearish candle, but it wasn't nearly as ugly as what we saw on AXP. So again, I do expect the markets to continue higher tomorrow, even though there is some overhead resistance that we need to watch out for. So let's look at some potential trade setups for tomorrow as well. First, we'll look at some things that need to happen, type breakouts that we're waiting for. Apple, kind of similar situation to the overall market. I put in this level here, 172.41. This pivot level here is what I was looking at. It also coincides with the 100 simple moving average, so if we get a close above this level here, then it looks like you could probably get in at the end of the day and see if we get back up and test our highs of 183.5 or so. And I guess I could actually draw fib retracement levels now as well, since we put in a low. That chart's looking a little messy, I apologize. You can see we have our kind of warning zone here and getting back up through our fib levels, but I do think that there's this gap here that needs to fill at 177.68, and we just want to make sure that we get above, like I said, this pivot level before we start getting in to long positions, in my opinion. So that's something to watch out for on Apple. Set your alerts, and at the end of the day, if it's not, if we get another huge white candle, bullish candle, you might want to be careful about getting in. But if we're closing, especially above this, the wick of this candle here, maybe around 175, even that's a little bit kind of far. You don't want to see too many huge candles in a row, because then you get some action like this. We had 4 big bullish candles, including a gap up, and then we had some sideways movement for a few days before moving on, pulling back and then going up again. So I would just caution you to get in, if there's a huge candle. But a moderate candle, a couple dollars up, that would look like a gradual run up that we could start feeling comfortable taking positions on. Another potential, Nike. So you can see that, and actually I should change the leg here, make it from here to here. So we had a big bullish candle 2 days in a row. Not saying we can't go higher, despite what I just said with Apple. It's a little scary to get in when you have 2 huge moves back to back. But you can see that MACD was declining. Although the stock traded sideways, that can be a sign of bearish divergence. It didn't play out that way. So let's see if Nike gets above this 70.25 level, and then we have targets of 72.5 and 75.36. And that looks like it would be all-time highs on Nike. Let's see, another potential breakout play, Micron. The reason I'm saying let's hold off on getting into this is because we still have the 21 and the 8 EMAs to kind of break through. Now, these are a little slightly less resistive than the 100 or gap fill. So Micron is really up to your trading preference. If you're comfortable, even though that we're kind of below the 21, it does look like we've barely closed above the 8. So there is certainly some room for Micron to run up if the overall markets decide to rally tomorrow. So this could be a first 5-minute candle. You probably would want to put your stop at the low of that first 5-minute candle and see if we run on up, see if we fill this gap here. I doubt tomorrow, but in a few days, maybe early next week, see if we start having a bullish reversal, maybe we come up and fill this gap. Let's take a look at WFC. Wells Fargo, it's been beaten down pretty severely as of late. We just got above the 8 EMA and this bottom that appears to be put in. So we'd be looking at targets of, well, let me redraw here. This was the swing. So yes, granted, we do have this kind of warning area that we might want to be concerned about getting through, but again, first 5-minute candle, you can see that the indicators are looking bullish. We've almost crossed through bullishly on the MACD. Stokes and RSI are looking bullish. If you want to take a first 5-minute trade, if we get a close above that first 5-minute candle, put your stop at the low of that first 5-minute candle, and then see if we kind of rally on up. This would be your first target here, 54.53, and then your second target would be maybe here at 56, with your, I don't want to say ultimate target, but your I guess third target then would be 58.50 or so. And if we break from there, we have some extension targets on the fibs. But Wells Fargo appears to have broken out of this base ever so slightly, and I don't see any reason why we might not continue on up and through, especially to fill this gap here from the 21st to the 22nd. Especially because how oversold it is as well. Dollar Tree. We had a very strong candle today into the gap. We're kind of in the middle of it. We're clearly above this base that was put in. I do think filling this gap is a complete possibility. That looks like it could happen. Well, I'm not trying to say a time frame, but the target would be 101.13. That's the low of this candle here. And let's redraw the fibs as well. And you notice that the warning area, so to speak, kind of coincides right with this low, the low of this candle here. So, fibs work kind of in mysterious ways sometimes. but they do tend to be pretty indicative of targets. They don't always work out, but you can see that when they do align, it looks pretty nice. So again, your first target is filling this gap here. Second target would be the extension, or the 100% retracement. Target 3 would be 115.71, which kind of coincides with the high here. And then your ultimate target would be 123.62. Obviously, all those later targets are a long way off, but I do think filling this gap is completely reasonable. Just kind of watch the 55 and the 100. Those will be some soft resistance levels that we'll need to break through as well. But taking a look at the MACD, looking very strong. Stokes are looking strong, as is RSI. Foot Locker, another one. So we've broken out of this downward trend. You can see we gapped down on, I believe, what was earnings. We've kind of rallied back a bit and had like a nice breakout candle today, breaking above this downtrend. I do think there's more room to run on Foot Locker, and these would be your targets. You could get out on the first 5 minutes, see if we come up and test 50.67. If we do, the next target would be 54.04, and then 58.38 would be the ultimate target. Again, this level that I've drawn here coincides with this pivot low. It was a pretty strong pivot point, and we also kind of, when we did break below it, we back tested it twice. We did kind of break through it again here in January, but this is still probably a realistic pivot level of 50.71. So just something to keep an eye on, in addition to the fib levels that I've drawn in as well. And lastly, Nordstrom, which its ticker is JWN. I don't honestly know what it stands for, but might be something for me to take a quick look at. Just my own knowledge. But anyway, Nordstrom has also been in this kind of downtrend with the market. We had a very strong candle today, broke above all of our exponential moving averages. We are in this potential warning zone based on the fib retracement levels, but if we can push through it, 53.98, basically 54, is the target. So you're looking at about a $4 gain. I think this is a worthy first 5 minute candle type play. Put your stop at the low of that first 5 minute candle, assuming that we get a close above the first 5 minute candle, and see if we run up. If anyone has any questions or comments, please feel free to leave them, but that about wraps up my analysis for tonight. Otherwise, have a great night, and we'll talk to you tomorrow.